Good morning, everyone. Let's get the show started. This is your Business Morning, this Tuesday, the 19th of March. I am Boston Omofai. Let's get you what's in the news this morning. Central Bank Chief Godwin Emefiele yesterday faulted Lagos Chamber of Commerce and Industry's position that faulted the recent foreign exchange ban on textile imports, calling for strategic approach to address the problems in the textile sector. Godwin Emefiele used the occasion of another meeting on the power sector to reply to the LCCI's two-page document saying, according to the central bank chief, that the strategic approach that the LCCI called for had never worked. The central bank chief says it has never worked because what is the policy we're talking about, according to him? Increasing duty. And he says today, now duty being paid on textiles is 45%. So the central bank governor trying to present the data around the imports and duties paid in Nigeria says the duty is 45%. So why do we still have textile importers not paying enough to the government on those imported materials? This was part of what the data he gave to the media. It says in 2015, Nigeria's textile imports was $9 million US, and that figure went down to $6.9 million in 2016, went up slightly to $7 million in 2017, and rose to $9.7 million last year. So the argument by the central bank governor was that if that was our textile imports and 45%, why do we still have that as the figure of total textile imports into the country within the same period? Saying the import paid by textile importers does not justify the amount or the volume of all imported textiles in the Federal Republic of Nigeria. So the big story on Monday at the central bank was the meeting between the central bank governor and his team with oil palm producers and the governors of Edo, Abia, and Akwa Ibom. He used the occasion, Godwin Emefiele, to outline the central bank's new measures to unlock the sector value chain, create jobs, and generate foreign exchange. So what is the new horizon on oil palm, which was among the 41 items which the central bank placed an FX ban on just about 2 years ago? The new horizon for the industry is a single-digit loan being proposed by the central banker, about 9% for core oil borrowers, those who are in the business of farming, and others in the value chain, according to the central bank, will get a new set of loans at 9%. That is part of the Anchor Borrowers Program initiative of the central bank and, of course, the regulator, who says it will work with large and small-scale farm holders on how to get seedlings for 2019 planting season. Part of the new horizon is also to get a viable off-taker deal sorted out between farmers and large oil palm producing companies. Meantime, you wondered why the state governors were there. Yes, it says the South and Southeast state governments have agreed with the central bank to provide an estimated 100,000 hectares of land for the new initiative. The central bank chief concluded, says there will be, of course, he says no doubt there will be initial pain caused by this new focus on oil palm local production, but the medium and long-run benefits remain unassailable and glorious for their country, end of quote. Okay, let's get what's other story. Meantime, the central bank, of course, has issued a circular to all microfinance banks reviewing its October 2018 document or policy on the new capital base for microfinance banks. This is what the new tier-based system of regulatory capital for banks, for microfinance banks, and a time frame for compliance would be. So let's just say that for you, what the new rules of engagement is for that space. Tier 1 microfinance bank will have to maintain 200 million naira as the new minimum capital adequacy level. Their operations will be concentrated in urban and high-density banked areas of Nigeria. The deadlines for compliance will be 100 million by April next year and raise that to the new threshold of 200 million by April 2021. If you're operating Tier 2 or Level 2 microfinance bank, you need 50 million naira as minimum regulatory capital, and you'll be operating around the rural, underbanked areas of the country. The deadlines for your compliance as a Tier 2 MFB will be 35 million naira by April next year and raise that to 50 by April 2021. For state governments that owned microfinance banks, the new threshold is 500 million, and that they have to comply by April 2020. And 1 billion will be the new level they had to meet by April 2021. For national microfinance banks, the new threshold of regulatory capital will be 3.5 billion naira by April 2020, and that will go up to 5 billion naira regulatory capital by April 2021. Okay, that's a summary of what's making the news, but we have one big story for everyone to talk about later on the program. But first, let's check in with the markets. The stock market is still looking for direction. It's a very lackluster Monday for the market. Investors are still a little bit sluggish about where to go as far as equity is concerned after the general elections. Temple Ashaju is giving us a bit of a summary of our three main markets here on our market street on Monday. Temple, take it from here. Good morning. Good to see you.
Good morning, Bolson. So the market was down some 0.06% yesterday, and we lost some 6.46 billion naira by way of what was decreased of what the equity capitalization actually shared. We saw Access Bank as the top gainer. We got 11 as the top traded security yesterday, which was up some 0.86% due to the fact that there was an announcement from the CBN and, of course, the SEC regarding its merger with or the acquisition of Diamond Bank, and that means that these two key regulators are giving out their final approval on this particular deal, which is meant to commence from the 1st of April, which is going to be next month. So yesterday we saw decline in volume and decline in value by some 42% rather, so 1.92 billion naira, and we saw just 3,821 deals in terms of the activity level of the market. So on sectoral front, we had declines in the insurance, banking, and oil and gas space, and then there was a bit of gain in the consumer goods and industrial segment of the market. WAPCO was able to push up the industrial segment, while Dangote Flour was continued to also push up consumer goods segment of the market as investors continue to anticipate some dividends and earnings for 2018 of this particular company. Oil and gas was flat, and of course the banking segment lost some 23 basis points, while the insurance segment was down some 1.82%. If you take a look at the energy stocks of the market, from corn oil down to Rack Unity, there was basically no change in terms of share price yesterday in the market. Corn oil was static, Forte oil was static, 11 PLC saw just 2,339 units trades yesterday in the market. O&O, that has been moving the market, the energy segment for some time, we had only 1.87 million units of its shares done yesterday. In terms of the unlisted securities segment of the market, that was up some 0.56% as uncertainty continues to permeate the market. A lot of some traders are beginning to move to the unlisted securities market gradually again, and of course yesterday we were able to see more buy sentiment. The buy side improved yesterday, and we saw some 897,245 units in total that was traded for a value of 17.64 million naira yesterday. For the bond market and of course the treasury-based market, yesterday for the bonds market, at the secondary side of things, we saw a bearish outing across the short, the mid, and the long end of the curve. There was a whole lot of sell-off, and if you take a look at the 18th of April 2037, we saw expansion of some 4 basis points here yesterday as that security got priced at 113 naira 70 kobo. Now at the T-bill segment of the market, trading was mixed. For the short and the mid end of the curve, we saw a bit of bearish sentiment, and that led to expansion at the short end of the curve, and of course expansion by 3 basis points at the mid end of the curve. But when you take a look at the longer end of the curve, where you have the likes of 241 day to maturities, we saw a bit of contraction there because there was a bit of more demand on that particular security, and so there was contraction by some 4 basis points at the long end of the curve. Boson.
Just 1 minute, very quickly. Any idea why this lethargy, as far as investors are concerned, on the equity space? What are you hearing from stock traders and perhaps analysts on Market Street?
I think, in fact, the much losses have actually reduced in recent time. A lot of traders believe that the foreign portfolio investors' interest in the market have been way reduced now, and so of course they were able to reduce that due to the fact that a bit of domestic investors had more interest in a lot of companies at this point in time due to the earnings season. So that gives room for the foreign portfolio investors to move out. So it is expected that this bearish sentiment will continue for the greater part of this year, but by the time we get to Thursday, Friday, it should should have reduced as a lot of investors, some investors may start bargaining over a lot of these equities to see how they can make a re-entry. But then a lot of investors and traders will also continue to watch some of the companies that have got a lot of fundamentals and are likely to be declaring dividends going forward, Bosun.
Yeah, okay. Temple, checking with opening call today later on the program. Thank you on our Market Street. Temple Ashaju, our business correspondent. But let's bring in the equities market here. Oil prices still trying to find a new bearing. Of course, the talks that the U.S.-China trade talks may be extended until April or much later. So the market is taking that in a stride. Then you have the suspension of next month's joint monetary committee meeting of OPEC being suspended. All meetings will now be in Austria in June. All of that in our commodities market. But again, how do we roll on our roll-off steel sector? That's the conversation with Nosike Nwajide, who is a member of the economic think tank at Financial Derivatives Company. It's live here in our headquarters studios. Good morning. It's good to have you.
Good morning.
Thank you. Let's start with not too much pretty good news, as it were, from oil, except the price. It looks like the big boys are still trying to find a way around supply and demand metrics.
Yes, they are. At this point in time, oil has been given a boost by shale oil, as it were. I mean, the projection for shale oil was to reach somewhere around 9 million by April, but the market's been jolted by news that production fell by as much as 3.9 million barrels a day yesterday. So that's giving the market a jolt, because expectations were for close to 9 million barrels a day. That, in addition to the crisis in Venezuela, the trade talks that were extended, positive sentiment in the market. So yeah, that's managed to give oil prices support it has, and we see it. The outlook is for it to continue to stay.
But when you look at part of the burning issue is that Nigeria's oil production is tapering.
Yes, okay. Nigeria happens to be more sensitive to production than price. Yeah, the OPEC quota at the moment is 1.69. As of January, we produced 1.88 thereabouts. So Nigeria is moving to compliance, basically. Right now at 1.74, that's still about close to 350 million barrels a day below
300,000.
Our budget for the budget benchmark
2.3.
2.3. I mean, if you take away condensates, it's down to 2.1. So it's about 350,000 below the
outlook.
Outlook. So make no mistake, a drop in production for us is not.
But looks like the external reserves is making a bit of an uptick based on oil prices.
Yes, higher oil prices will boost reserves. There's also before the elections, people stockpiled a lot of dollars, and now the elections are relatively peaceful. There's a relative sell-off for dollars, so that's helped to.
So that's bringing some money in.
Yeah, bring some money in.
In terms of our power sector, we're still hanging around like the sword of the Damocles, no one is sure.
Yes, as we approach the rainy season, the water constraint becomes less of a problem. The problem now is gas. It's gas constraint. That's the major problem. For the past, I think, three recorded days, it's been on the decline. At the moment, the constraint is about, I think, 1,800 megawatts down to gas.
Okay, not so bad. Naira is still hanging in there. The central bank is holding all the sword and the shield, as it were, defending the Naira.
Yes, as of yesterday, it slipped at the parallel market, slipped to about 360. That's down to okay. The major thing is the US dollar appreciated by against the basket of currencies yesterday and even the Thursday and Friday. So it's not just.
Investors just heard that. Well, the trade talks between Beijing and Washington may likely go longer.
It's not Naira weakening. It's a case of dollar strengthening. Yeah. So as of today, I think there's been some appreciation in the markets, and there's also the fact that CBN hasn't intervened in the market since, I think, on the 8th of March. That's almost 2 weeks now. So there's a bit of an illiquid market, but on the whole, it's more of a dollar strength thing than a Naira.
Looks like the central bank's watching something, and there's also a lot of inflows in the campaign and the election period. So perhaps the regulators just holding it there, see how things go before the next MPC, which is just this time next week. But let's talk about something very important about steel industry in Nigeria. How do we roll on steels from these moribund facilities that litters the country? You guys have any idea?
At the moment, competitive producing competitively is probably the biggest task at hand. I mean, the Delta Steel Company has been around for a while. It produces less than 2 million metric tons per year. What would be, in my opinion, the game changer is the Ajaokuta steel plant. We all know that story. The story's been around for close to 40 years. I mean, it has the potential to produce about 5.7 million metric tons per year. At the moment, Nigeria's import demand for steel, it comes to about 5 million tons. So it would cover that much in terms of our imports, and I think the potential for job creation is about close to 100,000 people being employed. How do we how we get?
I'm sorry to cut in there, and I just want to tell our folks to just move that to the next page, which is talk about steel production in Nigeria, and that tells you the very sad story where Nigeria currently still sits with steel production, and that's it there. We're a fringe player. We're just doing about 1/10 of the entire global production, and we have 13 steel rolling mills, 7 mini mills, and 2 integrated steel companies doing less than 2 million tons per year.
Yes, I'll correct you there. It's not 1/10. It's about 0.11%. 0.1% of global production.
So still less than that.
Which is about 1.8 billion tons a year. Nigeria. Yeah, obviously you need power, you need rail, you need rail transportation to get the iron ore from its the source raw material to the mills, wherever the steel plant is, before you now get it to the mill, when you produce the steel itself and take it to mill. So everything from power, from, I don't know, corruption, different diverse reasons. And for 40 years, the Ajaokuta steel mill has been unable to get on track. And there's talk of investors taking over, but obviously producing competitively.
Looking back at this page, we have major rolling mills in Katsina, in Jos, and in Osogbo. Right. So if we can wrap our hands or wrap our heads around Ajaokuta, because it's the big elephant in the room, can we go for the smaller ones? Perhaps if we get Katsina, Jos, and Osogbo rolling mills up and running, then perhaps we can come back to Ajaokuta.
Yes,
maybe.
That's a big perhaps, because I talked about competitiveness. In China, they've managed to, over the years, become more efficient in production. In China, in Japan, and in India.
The US?
India. Even the US, not so much. China, Japan, India, and in the EU, they managed to become more competitive and produce at a cost per ton that is way lower than Nigeria can right now hope to produce, cost that Nigeria can hope to reach. So unless...
To get started. So even if we get Ajaokuta and Katsina, Jos, and Osogbo up and running, we'll still have a long way to go catching up with the big boys.
It's cheaper to import than to produce. So as long as that disparity exists, I don't know how you manage to...
That disadvantage.
To convince an investor to invest, unless you want to start protectionist policies.
Perhaps this is what both local and foreign investors are looking at each time we talk about, let's get Ajaokuta up and running. And folks seem to get cold feet. You have bidders, then they go back, they will come forward.
Unless they can get some incentive in the form of tariffs, which I think is unlikely, given move towards free trade. I don't know how you can produce competitively at the moment if you don't get tariffs.
It's going to be a very, very big task getting this. But we need to get the steel mills.
Yes.
There's no way around it. But we just want to get started, whichever way.
Steel production is the bedrock of industrialization. And if you don't get that on track, I don't see
the backbone of industrialization. Thank you. It's good to have you.
Always a pleasure.
Nasike Mwajide, who is a member of the research team at Financial Derivatives Company. So this is one big story we're talking about next. So we'll just spend about 1 minute to scratch the surface for you. Of course, you heard about, if you're on social media, perhaps you've seen, they talk about the new National Housing Fund of 2018, which was a new law, put into a paper by the National Assembly, which seeks to repeal the National Housing Fund Act of 1992. The new law looks to mobilize additional funding for the financing of housing projects in Nigeria. So let's follow the money for you. Break it down. It's quite lengthy. But again, if you look at the levy of 2.5% on each bag of cement, that's part of how to raise money for the new housing fund. 2.5% of your monthly salaries, whether public or private sector, and if you are self-employed like a roadside mechanic, and you'll also be part of the new National Housing Fund. If you're earning from minimum wage at 2%, interest yearly, quite a lot. We'll talk about that when we come back.